Hello and welcome back to Sibos TV. I'm Juliet Foster.
And I'm Jack Delosa. Coming up here on Lunch with Sibos, we'll be looking at how organisations can get on top of the pace of change in payments.
Also ahead, we'll be examining the opportunities for Chinese banks as China invests heavily in its Belt and Road Initiative.
That's all to come in the next hour here on Sibos TV.
Last year, SWIFT held a global industry challenge for fintechs who are building services based on its GPI platform. It's part of their collaborative innovation for GPI. And here to tell us about the challenge and the role of fintechs in developing GPI services are Pedro and Mullor, head of GPI core initiatives at SWIFT, and the winners of the global industry challenge for GPI last year. They're Dean Birznieks, who's the product manager at Assembly Payments, and James Higgins, who's product director at AccessPay. Gentlemen, welcome to Sibos TV. Pedro, can I start with you? What was the purpose of the Global Industry Challenge for GPI?
Well, hi, Juliet. Happy to be on the stage and happy to be here with our two fintechs that participated in the GPI Challenge. The GPI today is an innovation platform which has 80 banks live and 280 banks signed and looking forward to implementing that. Together, they represent 80% of cross-border payments on SWIFT. So the idea of this Global Industry Challenge was to explore the possibility, together with fintechs, to develop additional value on the back of this platform for the benefit of the financial community, the banks, and the corporate treasurer.
Okay, and how did it work?
Well, we set up this process together with our colleagues at InnoTribe. So there was a prize of 2 times 100,000 euros for the winners. We interacted with 100 fintechs. 40 of them submitted an application to the industry challenge. And there was a short list of 5 fintechs which participated to this global event in Singapore. At which, together with participants from the banking community, 40 banks, there was a 2-day event in Singapore held September last year. And as a result of that event, there were 2 winners, 2 solutions, 2 teams, which, they have won this industry challenge. And as a result of it, the winners had the opportunity to participate to Sibos last year, and also we have been together developing a proof of value this year.
So a good relationship. And how would you define the role of the banks within the challenge?
Yeah, there was also core to the industry challenge because GPI, the success of GPI has been built on the back of innovation and co-creation with different stakeholders in the financial community. So the banks participated to this industry challenge. There was 40 representatives from 30 banks. And together they selected the ideas they wanted to work with. We split from the initial pitch of the 5 participants. We split, I would say, the participants in 5 different teams. And together they co-created, they listened to this initial idea, they provided their own feedback, they also expressed their own interest, so they steered that initial idea a little bit to the left or to the right, and then together they put together a final pitch for the jury of the industry challenge to decide about the 2 winners.
Okay, well, it was a good pitch, and James, you're one of the lucky winners, so congratulations. And tell us about your company. What does your company focus on, and where did you see that connection with GPI?
So AccessPay is a UK-based fintech, and we provide a focus for corporate customers on payment and cash management solutions. So we're on a mission right now to democratize access to best-in-class financial services and products for our corporate customers. And we're using previously untapped data sources to power financial transformation in the corporate treasury and financial operations of these organizations by using our analytics and machine learning tools to drive real change and insights for our customers. So for us, the link to GPI was clear in that GPI represents a huge and a new rich data source which our customers can leverage to further innovate and enhance some of the insights, develop more efficiencies in their payment operations. So the link was clear, and it was a great opportunity to be part of the GPI story.
Okay, then, and Dean, you of course were also another winner. So again, what does your company focus on, and where did you see the link with GPI?
Yeah, Assembly Payments is an Australian fintech focusing on payments, and really our focus really is about helping businesses that operate across different international boundaries as well as physical and digital channels. And so we look to sort of provide what we call simple unified commerce solutions to make help those businesses thrive in whatever they're trying to do. And really, we try and partner with banks, with businesses, and with payment schemes as well across jurisdictions to try and make it all simple for the end users involved. And really the link for us is, I think, as we increasingly become more of a global fintech, the opportunity to interact with all of those banks and then their corporate clients was just too good an opportunity to let go. And at the end of the day, we love a challenge as well.
And of course, it came good for you. But why did you feel that it was important for your company to take part in that industry challenge?
Well, as I say, I think SWIFT just has a unique positioning in the world and provides the opportunity to relate and closely work with banks. And increasingly, we have banks coming to us to help us sort of help them speed up their responsiveness, being able to be a bit more agile and use some of the modern technologies, APIs, etc. So we kind of feel like we're probably in a similar situation to SWIFT, with a lot of trying to help banks accelerate their innovation and their effectiveness in the marketplace. So we've probably got a lot in common. And as I say, as we become more global, it just makes sense to interact with global players like SWIFT. And
can I put that question as well to you, James, about your reason for getting involved in the industry challenge? Why was it so important?
AccessPay, whilst we're a fairly young company, for much of our history we've had a relationship with SWIFT in that we are an application partner. So we resell the Alliance Light 2 solution to our corporate customers. So we were aware of the GPI initiative and its potential benefits right from an early stage. And so our motivation for being involved in the industry challenge was really twofold. Firstly, we were determined that we would act as part of the GPI ecosystem wherever we could on behalf of our corporates, to ensure that the benefits of GPI make their way down and trickle down to the end user, in our case the corporate customer, and as fast as possible. And we see ourselves as a technology provider uniquely positioned to be able to deliver real benefit at pace and change at pace. And secondly, through our dialogue with our existing customers, then we have some unique insights into some of the challenges and often frustrations that they face in their organisation around their payment operations. And actually, in this particular case, some of the challenges they have around working capital management and cash optimization, we saw that GPI is well positioned through the data sets that it has to solve for some of these problems. And so the industry challenge was an opportunity for us to put forward proposed solutions around working capital, cash visibility and cash optimization, and work with the whole community to try and drive that into the hands of our customers.
Okay, Pedro, how has SWIFT been working with AccessPay and Assembly Payments since they won the challenge? Because clearly they impressed you and they seem to be going from strength to strength.
No, so that Singapore event was really great, and honestly, we left the event very energized from the different discussions with the fintechs and also with the banks. So as I would say, as a follow-up to that event, what we organize is a proof of value exercise. Now, what is a proof of value? We are during a proof of value, what we look forward to doing is actually verify an initial set of premises and assumptions, and we do that together with banks, and then we also brought some corporates into the equation to also provide their unique vantage point. So we set up on two different proof of value exercises, one on the verification of the visibility of incoming payments, and the other on a cross-border request to pay scheme. Well, it's been great. Honestly, these two, during the first phase, together with the participating banks, we looked into verifying these initial assumptions, discussing also further the use cases, and trying to identify any initial hurdles that could potentially block the development of that solution. So we could think about how to overcome them. And we learned a lot of, I would say, very interesting things from the two communities and the two different POVs. And then we set up on a subsequent phase together with the corporates. And they also bring their own unique needs and also unique challenges. And together we were able to better understand how these two solutions would bring value to the corporate treasurer and to daily operations from a company point of view on these two unique solutions.
So a fruitful relationship emerging there. But Dean, you're working with SWIFT and GPI banks on the cross-border collection of funds. So what are the big areas there for banks and corporates where you believe assembly payments and GPI can help?
Yeah, I think the design that we collaborated with SWIFT, the banks and the corporates to prepare really ticks all the boxes. Really, for banks, it's a way to help them, add some real value to their clients, be more relevant to their business, help them not just transfer funds, but also improve their operations, as Pedro suggested. So. And along that line, we've sort of taken a very much a standards-based approach, which fits in with a lot of the other initiatives that banks are already doing. And we were very conscious of leveraging the investments that banks had already made in the GPI infrastructure, the tracker, etc. So that's for the banks, and for the corporates. Really, on the creditor side of the transaction, there's really huge benefits from the request to pay, particularly around helping them reconcile payments and reducing the cost of actually reconciling payments. If you can get that request going to the debtor with all of the right reference information and have it come back with that same reference information, it just makes your whole world a lot easier. So we've heard in the engagement sessions with the corporate clients that they really appreciate that. And on the debtor side, there's great opportunities as well as far as reducing the risk of invoice fraud when you know that the request is actually coming from someone who's been verified and authenticated via the bank across the system with some nice structured reference information, so you know who it's from, what it is that they're requesting, and you've got some flexibility with how to respond to it. So we feel like there's value for all parties, and pretty excited about the opportunity.
Sure. And from your perspective, Pedro, given the sort of broader sweep of things, why do you think it is absolutely essential to involve fintechs in the development of GPI? Because clearly, as we've learned from the experience of Dean and James, there is so much to be gained.
Well, we believe that there is much more value in being in this together. So fintechs come with their unique capabilities, the very strong know-how on their specific areas of expertise. And because of that, and also because of the success of the GPI really being built on the back of co-creation and collaborative innovation, together with the fintechs, we believe we are in an even stronger position to deliver even more value for the banks to the end corporate treasurer. And so the more the merrier.
Okay, well, let's on that very positive note. But gentlemen, thank you so much for joining us on Sibos TV. Thank you.
Thank you.
The pace of change in payments is relentless. So how can organisations keep up and even get ahead, especially when they operate across the globe? To explain the challenge and how it's being met, we're joined by Naveed Sultan, Global Head of Treasury and Trade Solutions at Citibank. Naveed, welcome to Sibos TV.
Thank you. Thanks for having me.
Thank you very much for being here. Now, Naveed, as you know, the theme of this year's Sibos is enabling the digital economy. How have you seen the industry shift to a more digital model?
I think the digital economy, or this whole notion of digitization, I think is a very profound phenomenon of our times. And this manifestation is that it's bringing the world closer together and developing it into a interconnected marketplace. And it does provide impetus to financial, commercial, and capital flows around the world. And if you look at the traditional trade, which was the phenomena of 20th century, it may be somewhat leveling off, but the digital flows are soaring, meaning transmission of data, innovation, ideas are really soaring. And today, the participation in a global economy is not just the domain of multinationals. Everyone today, be it individuals, small, medium enterprises, everyone is participating in the digital economy and around the world. So therefore, I think it's imperative that the constituencies who are part of that digital economy are reimagining their business and operating models to stay relevant and be successful to their clients and other stakeholders. So as far as Citi is concerned, we are making a lot of investments, essentially in 4 key areas. One is improving the client experience, because in a digital economy, your expectation of client experience is very significantly better or different than in a traditional or analog economy, so to speak. Secondly, making your operating model more scalable. Thirdly, your operating agility, meaning as the markets shift or new trends emerge or our clients' needs change, you should be able to respond a lot more efficiently. And lastly, a concept of continuous innovation. And I think those 4 areas of investment, we believe, will help us stay relevant to our clients and help them navigate the opportunities and challenges of a digital economy.
Naveed, you mentioned customer needs, client needs. How are client expectations changing in the face of all these technologies?
Yeah. What we are seeing is that there is a clear convergence of consumer and institutional client expectations in that they want a real-time response or client experience, transparency, efficiency, and a frictionless movement of their financial and commercial flows. I think that is relatively easier to deliver on the consumer side, but on the institutional side, it's a lot more challenging because the corporate clients or other institutions, they operate in a global context or a regional context, whereby they have several legal entities, different regulatory and economic environment, and all the rest of it. So it becomes relatively more challenging. But having said that, I think the investments we are making in our core technologies, the investments we are making along those 4 attributes or 4 areas, which I mentioned, I think are helping us to respond to that shift in the client experience, both consumer as well as institutional.
Naveed, you said publicly that you see Citi employees as one of the driving forces of innovation. How are you tapping into this force?
If you look at a global organization like Citi and our business model, we essentially have 2 key attributes as a company. One is our globality. We are the most global bank in 100 markets, and our multi-geography client relationships. So when you go by that logic, we have thousands of employees around the world in those 100 markets. And harnessing their creativity and their ideas, we believe, is a very potent source of innovation and creativity. And therefore, we have developed what we call innovation ecosystem. And that innovation ecosystem has some components such as our innovation labs. We set up cross-functional teams around new technologies like artificial data, cybersecurity, e-commerce, blockchain. Similarly, alliances and partnerships with fintechs. We work very closely with fintechs, look at their capabilities and how we can integrate those into our solutions to deliver a better outcome for our clients. And then we have a digital advisory practice, and so on and so forth. This innovation ecosystem is being delivered through a portal at the desktop of our employees around the world. And they can interact with this ecosystem. They can draw upon it, they can learn from it, they can exchange ideas with other colleagues around the world, and at the same time, they can make a contribution as to their idea. And that idea gets picked up by our innovation centers, and obviously we evaluate it, set the priorities. So we are very proud of this, this portal and this whole idea of innovation ecosystem, because it helps us institutionalize innovation as well as making it mainstream, to your point, how you engage every employee and harness their creativity.
These sound like really powerful shifts internally. How are you gauging and utilizing some of these initiatives to develop new products?
We have a range of initiatives. So we have a portfolio of initiatives in our innovation labs, which are essentially the sources of that is, again, our employees around the world. We also co-create with our clients. In our innovation labs, we bring our clients, we work together looking at the opportunities or the issues they may have. And I think that particular practice generates some very, very good ideas. Similarly, our geographies, our product development, and so there are multiple sources of new ideas in addition to obviously our employees and our clients. And in that, we are rolling out blockchain-related solutions. We are rolling out solutions around artificial intelligence in data. We are rolling out new payment solutions where it is frictionless. We are rolling out the new solutions in cybersecurity space, whereby we are using some of the artificial intelligence biomatrices to strengthen our own security of our flows. So I think if you look at those range of activities, we are utilizing new technologies to deliver a better outcome as far as our clients are concerned.
Naveed Sultan from Citibank, thank you so much for joining us on Sibos TV.
Thank you for having me.
China's economy is one of the biggest in the world, and its companies are active around the world as they build the Silk Belt and Road, a belt of overland corridors and a maritime road of shipping lanes. So its banks need to deliver services on a massive scale. Here to tell us about how Chinese banks are responding to the challenge, we're joined by Mr. Peng, Deputy General Manager at the Industrial and Commercial Bank of China. Welcome to Sibos TV, Mr. Peng.
Hi, good morning, Jack.
Now, China is investing heavily in its Belt and Road initiative. What opportunities is that creating for Chinese banks?
Yeah, so with the further promotion of the Belt and Road, the Chinese financial industry is accelerating reform. The global network is promoted to service our clients. Takes for ICBC, for example, the banks has already achieved internationalized development trophy in the past over 25 years. And ICBC has established more than 419 institutions in 45 countries and regions. Among them, about 20 countries and regions along Belt and Road. And ICBC also directly cover 20 African countries as a shareholder of Standard Bank. So ICBC now is at the leading position of this market.
And what services do Chinese corporates need from ICBC as they go global? Actually, ICBC is quite focused to provide the
tailor-made the products to our customers. So especially with the going global Chinese enterprises, ICBC is provide such as FX, trade financing, risk management hedging, as well as smart service with the fintech such as big data analytics.
And what role has ICBC played in launching the GPI services in China?
Yeah, thank you for your giving me a time to make advice for ICBC. Actually, ICBC is one of the pilot banks who launched the Swift GPI in 2013 February, which is the first batch of the banks to launch GPI. From then on, ICBC has gradually rolling out the Swift GPI to 16 overseas net institutions recently, and I have another good news for you. And just before the Sibos this year, ICBC has finished the test, especially for the instant cross-border GPI payment.
Right.
And which means that ICBC can effect the payments from China to Australia, which means they make this kind of linkage between GPI and MPP, effect this kind of payments in seconds. So that means the Chinese bank, especially for ICBC, is also keep the leading position in this field.
That is good news. I know many people who will be very happy to hear that.
Yeah.
Now, Mr. Peng, I'm interested. An event like Sibos, it attracts an international audience. How does it help you build relationships across the global banking community?
Yeah, in my opinion, that Sibos is celebrating its 40th anniversary this year, and actually this is 10th Sibos for ICBC, and I think ICBC is quite very important for ICBC to take this chance to discuss and communicating with our clients. So we are quite eagerly to take this opportunity to take the latest dynamics experience with our correspondent banks, especially in the clearing payments, regulations, innovations, and so on, to deepen our relationship with our correspondent banks.
And finally, what will you be doing at Sibos this year?
Yeah. I'm quite be honored to have attend several officials meetings and events in this Sibos. Actually, ICBC will host Open Search this year, which named New Arrow, New Opportunities, to introduce the latest Chinese capital markets information to the participants. And we also have enjoined the Swift GPI sessions to give the latest information, which means the transformation to Swift MT to APIs in the next few years. And I myself am a speaker of that panel. And also we have a joint stand forum. That means we'll give our perspective, especially for the China's PMIs and fintechs, and what will ICBC will do in the next future. Thank you.
Which I know we're all very much looking forward to. Mr. Peng, thank you so much for joining us on Sibos TV.
Okay, thank you.
Australia's banking industry is very unusual. It has only 4 main banks and serves a population of only 24 million people.
Yet, it is one of the most innovative in the world. To tell us more, we're joined by Janice, Head of Australia Global Transaction Services at Bank of America, Merrill Lynch. Janice, welcome to Sibos TV.
Thank you, Jack.
Thank you so much for joining us. Now, you've worked in the financial industry in Hong Kong, Singapore, Malaysia, and now Australia. What are the key trends that you see across the Asia-Pacific region?
I think if there's anything that we have heard in today's first day session is that change is the only constant. I know it sounds cliche, but the reality is there's a lot of change going on amongst us, and the speed of change is what we need to keep up to. And there's a lot of driving forces behind, what these changes are. It's not just a trend for Asia Pacific, but it's a trend across multiple regions as well. One is the ever-changing regulatory environment. And you can say regulatory changes in the form of stricter tightening of regulations that could actually stifle innovation in some ways, because it derails us from focusing on innovating and focusing on anything that ultimately brings value and something new to enhance customer experience. But at the same time, there's also quite a fair bit of deregulation happening in other markets, in emerging markets in particular, because these deregulations are required so that the markets and the countries can actually compete with the other developed countries. So that's one. I think the second area in which we see a lot of change is really in technology. I wouldn't even call it emerging technology. I think the new technologies and the emerging technologies are already within us right now. We live and breathe technology on a daily basis. And it's what do we do and how much can we take advantage of the technology that's already here, the here and the now, and what we ultimately do to transform our customer service model to our clients. And last but not least, it's really the adoption in mobile. I mean, nowhere in this world, I think we agree, other than this part of the region, where you're actually seeing how quickly mobile technologies are adopted. I mean, 10 years ago, I would never dream of conducting banking on my mobile. Today, it's the only thing I know. I can't even tell you if I went onto my laptop and I tried to log in. I can't tell you the additional authentication that the laptop is asking me, because all I know is my thumbprint that goes onto my iPhone. And you can think about, you can look at China, for example. It's a classic example of how they've actually completely skipped a generation of payments. From cash, forget about checks. I know many economies, large economies at that, are still grappling with how to deal with checks and moving from analog to digital. But China has completely taken a leap of faith. I mean, it's nobody talks about cash now. I don't think anyone in the millennials generation has ever had a checkbook. Everyone is talking about mobile and digital wallet. So I would say key trend, change, and pace of change, speed of change, and how do we then as financial institutions react and adapt to some of these changes?
And let's take that concept of change, the dynamics, and apply it to Australia, a land of contradictions, that you've got a big country with a very small population, but how vulnerable is it to the macroeconomic trends that are being played out in other countries?
Well, what's unique about the Australia financial markets and the economy is the very fact that we've actually enjoyed 27 years of consecutive economic growth. I think people often take that for granted. Not many other countries can come out there and say, yeah, I've had 5, 10, 20, 27 years of economic growth. Australia is in a unique situation where it's a large country by geography. It's a small population relative to its size, but by no means is it a small economy. It is the 13th largest economy in the world. And I think, in terms of its vulnerability, I mean, we have seen strong population growth, aided by, certain loose financial conditions. For example, low interest environment. For 2 years, we've held our interest conditions. We've got a relatively weaker Aussie dollar in 2018. All of that have translated to quite a fair bit of boom in terms of, growth in infrastructure investment. And I think that in itself, says a lot to us in terms of the resiliency of the Australian economy going forward. Now, having said that, the geopolitical environment is changing. There's a lot happening in that space. And as a firm, our focus really is helping our clients anticipate and adapt to what some of those changes are, in particular in the risk management area.
And due to a lot of the factors that we're discussing, do financial institutions in Australia face different challenges to those in Asia or other parts of the world?
Yes and no. I think no, in that we are seeing a lot of changes taking place across the marketplace. And when you say regulatory environment is changing in one market, let's say China or in India, for example, the reality is a lot of Australian businesses also conduct business with these counterparties. So no change in one country doesn't impact the rest of the world. So I'd say, from that perspective, the changes that are taking place, the challenges that are being experienced and being observed in current marketplace is very much felt in Australia. Having said that, I think Australia has a bit of a unique advantage. Going back to the earlier point around, economic growth, less disruption in terms of financial markets instability, and frankly a relatively safe and sound financial system allows for Australians and the Australian banking sector to actually reflect and review the past, its current state. Are there opportunities for us to rise above and innovate, because we don't have all the other disruptions that's taking place in the market to derail us from actually focusing on what the customer proposition ultimately is.
And let's stay with the theme of innovation, because the financial services sector in this country is extremely innovative. So you touched on one reason as to why that is the case, but clearly there are others. But also, what does it mean for banks operating in this country, effectively 4 big banks?
I think it means that banks need to collaborate. At the end of the day, the pie is this size. Yes, with economic growth, with globalization, the pie can continue to grow bigger, but you cannot expect that the pie doubles and triples in its size. And we need to come together and collaborate in order to provide and transform the customer proposition. I would say that Australia has been able to innovate as a result of the growth and the stability that we've experienced. I would also say that we have to recognize that there's quite a fair bit of uniformity that exists within the financial services industry in Australia. For starters, we all speak English. All our clearing systems are only a handful in the entire country. It's nationwide. We don't necessarily have the complexities around tariff controls, around currency exchange and capital injection. So all of that allows for a platform for us to better ourselves, and ultimately it's on to ourselves to come together, look at our peer banks in the eyes, and the industry players as well as fintechs, and say we've got to come together and collaborate so that the model that we have today, we can actually transform it, not just domestically but benefit everyone across the borders.
That is very powerful. And Janice, one of Australia's biggest recent innovations was its real-time payment system, the new payments platform, or NPP as we know it. What impact has that had on your clients since it was launched a year ago?
Yeah, so the NPP was launched in February of this year. And what it allows us to do is, if Jack, you and I wanted to go to a bar for a drink after this, and you paid for me, but you actually wanted the $6 back from me, I am able to...
Wouldn't be a very good friend in that instance.
But we don't know each other that well yet. So I can instantaneously, through what is called a Pay ID. I do not need to have your bank account details. I don't need to have a BSB number. Just give me a mobile number or an email address, and I can instantaneously transfer $6 back into your bank account through that Pay ID. Plus, I could give you 280 characters as references, including a beer icon as an emoji. And believe me, consumers in Australia love a good emoji. They love emojis. So that is its current state at the moment. Now, at Bank of America Merrill Lynch, the customer base that we serve internationally, including in Australia, really are in the corporate and institutional space. So the NPP at its current state, in terms of its applicability, is probably somewhat limited. I mean, no one corporate organization wakes up and said, I gotta make that payment right now and I need it instantaneously. But they would love to receive instantaneously because it's liquidity and it's reconciliation. So I'm excited about the prospect of what MPP will bring when it implements the OSCO 2 and 3 overlay services, which comes with the ability to request for a payment, as well as data that can be attached to the payment itself for straight-through reconciliation. So I'd say watch this space. I think there's a lot of applicability to the corporate institutional space, not immediately in its current state, but certainly in the next 12 months.
And certainly people are watching because there's been a lot of talk about MPP at Sibos, and also artificial intelligence, one of the big topics as well. So from Bank of America's perspective, what's being done with AI for your Australian clients?
So we've been very excited gearing up to the start of 2018. We've just launched an AI-based service to allow for our client base to achieve straight-through reconciliation. And what that means is if you are a large corporation receiving 1,000 transactions a month, and with each transaction, you could have 100 invoices attached to it. Sometimes you aren't necessarily able to tell specifically what you're being paid for. It's great you have the funds sitting in your account, but it works nothing for you if you can't apply cash. So the AI technology that we've deployed serves exactly that purpose and serves exactly that gap that corporates have. And that is in its ability to 100% on an accurate basis match what the incoming invoices are against the funds that have hit the bank accounts. And if there's not a 100% match, what potentially could be suggested matches? And we throw those as exceptions back to the corporate for them to manage. So today you could have, a receivables that is matched on a, let's say, 50% basis. Tomorrow with AI, and AI is hungry for data. The more data set you throw at it, the more it's going to learn and the more it gets better and improves. So if you were to be able to increase the accuracy, say up to 80%, effectively as an organization, you only are left with 20% that you need to manage as suggested match or completely unmatched items. And I think the power is really in our ability to take away operational tasks from our clients. Ultimately, as a business, what should you be focusing on? Your business. You should be focusing on growing your top and bottom line. You should be focusing on your customer proposition, not on receipting and matching invoices in the back end. That's something that the bank can do for you because the data is already there for us to manage and for us to analyze.
Some very exciting developments indeed. Janice Dang from Bank of America, thank you so much for joining us on Sibos TV.
Thank you for having me.
Pleasure.
It's been a pleasure.
Cybersecurity is one of the main themes this year at Sibos. Swift's customer security program, known as CSP, works on strengthening the security of the whole banking system by helping banks improve the security of their individual part of the system.
To update us on the CSP, we're joined by Pat Antonacci, Managing Director of the CSP at Swift, and Marc Hofmann, Swift's Chief Information Security Officer. Gentlemen, welcome to Sibos TV.
Thanks for having us.
Thank you very much for joining us. Now, Marc, we'll start with you. What approaches are cyber criminals using to plan their attacks on the banking community?
Yeah, so first of all, our observations show it's not just one group, so we have different groups. And they have different behaviors in their attacks. However, they have a couple of things in common. So they are far better resourced and far better skilled than they have been in the past. So they're able to do sophisticated attacks. And as we speak, they are learning. And so do we need to learn and improve.
What about the Swift network itself? Is it a target?
Yeah, so we have no evidence at this point in time that Swift has been successfully attacked. We did in the past few years significant investments in our cyber capabilities. And I think the whole community is in an arms race against the bad guys. And so we do need to continue to focus on this topic and do need to invest in that. So as a CISO in Swift, my primary focus is security of Swift, obviously. But the second focus clearly is the security of the whole community. And I think this is a role Swift needs to play to help the community.
Pat, speaking of the community, how do attacks on one Swift customer impact the whole community?
Yeah, I think as Marc alluded, a single attack is a local infrastructure, so it doesn't have a direct impact on the community. But as the cooperative that we play in the role we play at Swift, we said, let's do this customer security program so we can raise the bar for the entire ecosystem so that you don't run the risk of, the lowest player creating the biggest risk and the risk of the player in the chain that breaks the chain, right? A lot of the learnings as well from a community is to take those incidents and learn from them and share that information. And we do that through the Swift ISAC portal that allows us to share the information anonymized with the rest of the community to stop further attacks from happening in a similar spectrum.
And Marc, what is Swift's role in responding to these attacks and indeed the threat of future attacks?
Yeah. So I think Swift can and need to play a facilitator role for security for the whole community because we connect all the participants. I strongly believe that collaboration is a key critical capability of the good guys today and going forward to succeed against the threat on the cyber side. And a good example is, and Pat, you just mentioned that Swift ISAC, for example, we share information with the whole community, which comes from the community and from our researchers and analysts, like, for example, indicators of compromise. So we help the community to learn from the others, and I think this is a critical thing.
Pat, Swift's customer security program, the CSP, is a key part of its response to these threats. What's its specific aim?
So we look at it in 3 components. The first is to create a baseline of general cyber hygiene that everybody should follow, and we create a framework around that and controls that people should comply with in that process. But on top of being secure, also looking at detection and response. So we've put together a number of tools to, if you are compromised, how do you detect that process and respond to that? The second is understanding that we don't live in an ecosystem that's just our own environment. So we need to make sure that we're engaged with our counterparties and there's transparency so that I understand what my counterparty is doing and he understands what I'm doing so that you can manage the risk around cybersecurity in that process. And then the last one is around sharing. So making sure that we grow from the experiences that we have, as Marc alluded.
Now, we know that December 2018 is the deadline for SWIFT members to comply with the mandatory customer security framework controls. So would you say the community is now on target?
Yeah, I think last year it was the year of attestation. Where are you in your process? This year, as we have the buttons, it's the year to comply, right? Comply now. So we did see a number of organizations already comply last year. We're seeing them continue to fill those gaps that they had on some of those controls, reattest to their process, and by the end of this year, they need to reattest their level of compliance and to be compliant with at minimum the mandatory controls that we defined as that minimum baseline for cyber hygiene.
Pat, what's next for CSP? What do you see for 2019 and beyond?
Yeah, so we need to continue to evolve, right? So it's not a one-time checkbox exercise. It needs to continue to evolve as the threats evolve. So we've already released what we call version 2019. So what are the controls we want people to apply to by 2019? We're looking at that now for 2020 as well. But I think the big key will really be making sure that we continue to evolve our detection and response. There are attacks, there will always be attacks. The quicker we can respond and block that money from leaving the system, that's the success, not necessarily whether we were or weren't secure at the time at a specific customer endpoint.
Okay then, so plenty there to think about, to discuss in the future as well. But Pat Antonacci and Marc Hofmann, thank you so much for joining us.
Thank you.
Thank you, Hangers.
In the UK, the real-time gross settlement service is the infrastructure that holds accounts for banks, building societies and other institutions. It has been a great success since its launch 20 years ago.
But now a renewal programme for the service has been announced, and here to tell us about the programme and its goals, we're joined by Victoria Cleland. She's the Executive Director for Banking, Payments and Financial Resilience at the Bank of England. Welcome to Sibos TV, Victoria. Now look, the RTGS, it's been a huge success over the last 20 years. So what is driving the current need for renewal?
I think one of the key things that's driving it is actually trying to increase resilience. So the system was introduced in 1996. We've been learning lots at Sibos even just today in terms of how much technology has changed. Think what your phone was like in 1996. So we want to renew the system. Resilience is really key, but also we're looking at changes of technology and seeing how we can build on those for innovation to actually make it a much more sort of system for the future. So we don't just want to renew it as is. We're going to add a few bells and whistles, as one would say.
And Victoria, what is the role of the Bank of England in the renewal programme?
So the Bank of England actually owns and operates the system on behalf of the market. So we're driving forward the programme. So we decided we actually needed to renew it. But we've been working incredibly closely with the industry to understand what they want, and also with Pay.UK to sort of make sure that we're doing something that is fit for the whole of UK payment infrastructure, not going it alone just for the high value side.
And what's the vision for RTGS that you want that renewal programme to deliver? What's the goal here?
So absolutely the heart of it is resilience for the system, both in terms of operational resilience. We have incredibly high targets, 99.5% sort of operational ability, also strengthening it against cyber attacks. So that resilience side is at the heart of what we're doing. But at the same time, we're trying to think, how can we increase the end-to-end risk management? So recently we brought CHAPS, which is the high value payment system for the UK, that came into the Bank of England. So we're trying to use the bank's own expertise, skills, cyber and things to look at that end-to-end process, right from our real-time gross settlement system through to the direct participants' own things. We're also looking at what more can we give to the direct participants, the users of the system, in terms of increased functionality, greater use of big data, greater liquidity saving mechanisms, interoperability, something again we've heard a lot about at Sibos so far, but really trying to think, can we have a better way of moving from our system to some of the retail systems if one of them gets into difficulty. And an absolutely key part of the renewal is actually to open up access to even more players. So earlier this year, the Bank of England introduced 2 non-bank payment service providers for the first time. We want to expand that, so making the system much more open and accessible to really increase innovation within the payment system, increase competition.
And Victoria, what do you perceive could be the biggest challenges in the transformation?
I think one of the really big decisions is sort of what technology do we want, and as a central bank we're really sort of treading the fine line. We want to be leading edge, we don't want to be bleeding edge, but quite where do we get on that? Also, I think it's really making sure that we understand what the changes to the system will have to our own operating model going forward. What does that mean for our staff? And crucially, I think bringing the industry along with us and making sure that they're actually ready for the change themselves. There's no point us being open for business with a new system if the industry aren't all there waiting at the same time. So a lot of coordination.
Now, previously, the Bank of England said that it wouldn't use distributed ledger technologies to deliver its RTGS system, but recently there was a proof of concept that was undertaken. So can you explain the thinking in this area?
Absolutely. So we did look at distributed ledger technology and decided that for something as big and important as our system, so there are about £600 billion of settlement per day goes through RTGS, which is about a third of the UK's GDP. So looking at DLT at the time, we just don't feel it's proven enough. We're not sure about the scalability. But what we do want to make sure is that when there are sort of participants or systems who want to sort of plug into RTGS, that they can do so using DLT. So the proofs of concepts that we ran over the summer were really trying to say, if somebody wants to connect to us from a DLT system, can that work? And the really good news was that it can, and we've put the results up on our website for people to read.
Victoria, you mentioned earlier that resilience is obviously at the centre of the design of the RTGS system. How are you ensuring this is the case?
So I think it's something that the team are very keen to make sure we consider at sort of every step of the journey. Also, we're working very closely with the National Cyber Security Centre, so really to get the latest intelligence from them to think about what we're doing. And that's not just in terms of building the system, it's also when we're thinking about procuring the system, being very careful how much information we would be sharing with sort of potential suppliers and things. And again, trying to think of that sort of end-to-end process, and not just what we put into our system, but how would the direct participants connect, what would their sort of resilience be?
Can you tell us how the Bank of England is working with the financial industry, banks and regulators, of course, on the RTGS renewal programme? What's happening?
So I think it's really important that we build a system that is what the industry wants and needs. Ultimately, the model is that it's industry who'll be paying for it. So at the very start, we had a number of bilateral meetings, but also consultations within the UK sort of financial services sector to say, what do you want? What are the changes you'd like? And based on that response, we came up with a blueprint that we published in May 2017. Since then, we've been really keeping up that engagement. So we have a number of industry fora every few months. So I chaired one a couple of weeks ago, about 150 participants there. We have an external advisory body where we're having a much more in-depth discussion to get their views. And again, so making sure it's something that they want, but also making sure that they're going to be ready for it. Working very closely also with Payment.uk. It was renamed earlier, within about 5 days, which is why I hesitate over the name. It was new payments operator. Now it's pay.uk, and so working with them to understand how what we're doing, the real-time gross settlement system, will fit into their plans in terms of the core retail systems with the new payment architecture. So I think sort of understanding and collaborating in the UK is key, but also the lessons we can learn from our sort of central bank counterparts around the world. So it's been great here sort of sharing ideas with a few people as well.
What benefit will international standards such as ISO 20022 bring to the program?
I think it's really helpful in terms of increasing much more standardisation of messaging. One of the big themes has been in terms of you're going to move to sort of more cross-border payments. If you've got the same messaging standards, collecting the same type of information, that can help. It can also help with interoperability. So if there was a problem with one of the systems in the UK, if we're using the same messaging standards, that should in theory help to sort of switch them from one system to another. Also really important in terms of the information that you can collect, which can be helpful for sort of AML, understanding your customer and things. So lots of benefits from it, which is one of the reasons, I guess, why it's so many sessions on sort of LEIs, ISO and things here today.
And on the subject of sessions, Monday's session, Re-engineering International Payments for a Fast Digital Age, the speakers argued that international payments need to be more open, compliant and secure. So in your opinion, how can that be achieved?
So I think those are all sort of really great goals. I think the one thing I'd add to that is actually being more efficient as well. So I think one of the issues that we're finding, particularly in sort of cross-border payment, is there are so many frictions in that, and that is adding to the cost. So I wish I knew the absolute answer to that. I think it's something that everybody is trying to solve. The Bank of England's doing some work jointly at the moment with the Monetary Authority of Singapore and the Bank of Canada to see what we can are the sort of issues around cross-border payment that could be perhaps addressed by sort of distributed ledger technology or something. So I think we're doing some research into that, but I can't give you the answer this time. Maybe next time.
Are there any aspects of your experience on the renewal program that you'd like to share with other central banks?
I mean, we're still at a sort of fairly early stage in it, so I'm sure there'll be many more lessons to learn over the years. I think one of the key ones, though, is really don't forget the good things that you've already got. And so it's sort of, as we say in the UK, don't throw away the baby with the bathwater. There's a lot of really good stuff in our current system. So it's remembering that, which is important so you can build on it. But it's also really important when sort of inspiring the team. So they're still running the current system, which is doing a fantastic job. So you don't want to say, oh, the new one is shiny and fantastic. I think don't underestimate the amount of time it can take to sort of get the program team up to strength. There's so much going on in the payment world, changing technology, resources there are sort of quite difficult to come by. And I think, to my mind, the most important thing is really bringing industry along with you, so consulting with them, understanding what they want and sort of helping them along the journey rather than giving them a big surprise at the end.
OK, so some sound advice there. Victoria Cleland, thank you so much for joining us.
Thank you. Thanks.
That's it for this show, but there's much more to come here on Sibos TV, including live coverage of the main conference discussion, focusing on what the bank of tomorrow will look like. That's coming up next.
We'll be back with more in Sibos Today right here in an hour. We look forward to seeing you then.